guys, so I'm going to give you guys another candlestick lesson, and I want to show you guys a little bit of a setup that I used on SPY on Friday. Now I did multiple on SPY, but this one is not a lesson that I don't think I've done yet, which is on descending channels. Now you have descending channels and you have ascending channels, and in this case the descending channel is pretty much bearish until you get a breakout, and so the breakout is basically above the top parallel line in which the stock price is moving in between, or should I just say candles are moving in between. So I'm going to give you guys a little bit of a whiteboard lesson on this thing really quickly to show you guys what I was tracking, where the breakout took place, where I made my move, got in and got out, so that you can use this to add to your own arsenal. So let's go to the chart. First thing you gotta know, you guys can see I still have these lines here from Friday, okay? And this is the descending channel, okay? You notice the price is moving in between these two lines. And what you're looking for is a breakout above this top line, okay? So descending channel. All right, here is where you look for a breakout from this top line here to start moving to the upside. And in this case, I looked at two things before I made my move. I was in this trade all of 20 minutes, by the way. So it can sometimes take a little bit of patience, or depending on when you catch the channel. So by the fact that this channel, was pretty much formed out, I just kind of went in, went back a little and drew these lines, and I finally got that notification that boom, we broke outside of that top line and we were beginning to move up. Okay, so it can just be a matter of waiting things out and letting the breakout take place. So this bottom piece here, this is the breakout candle right here. That's the candle that broke outside of that top line, but I don't make my move just because the price is pushing out. I want to see a close, and usually I make the move on the candle after the breakout candle, which is this one here. This is one of my confirmed candles, okay, or just a confirmation candle to kind of make a move to say, okay, we've closed above the candle where the breakout took place. Now, there was nothing else here that I use in this trade. We'll talk about moving averages, or EMAs. In this case, this orange and this green line that you see here is my 9 and my 20 EMA. These are, you can actually use EMAs as support and resistance, where you see the price is hitting it and then it rejects, it hits it and then it rejects, and it kind of starts to trail along the bottom of the line. It's acting as a resistance, and it can also act as a support, okay? But a moving average is just basically the average price that a stock has been over a certain time period, okay? And in this case, I have the 9 and the 20. So you guys see here where we got the breakout here, and we also got a cross where the 9 crossed above the 20, indicating that things would potentially get bullish. And using EMA crosses can actually be something you can use as a short-term or a long-term or mid-term type trading strategy, to where when you get across to the upside, you can make a move and you can ride it up, or when you get across to the downside, you can make a move and ride it down. So in this case, you see we've got the cross here, the price pushed up. But let's look at this little piece here. We got across to the downside and the price moved down. You never know how long it's going to go down for or go up for, so you want to be quick on your feet. Make sure you're reacting to what you're seeing on your charts and having a clear target, okay? And so right here where I have this black line, now it's actually a bit off. I got in at 690.17 on this trade, okay, which is on this candle, and I got out on my target up here. I had my take profit already set on Webull, so as soon as it hit, that thing closed out the trade, and as you guys can see, it rejected and it came right back down, rejected that same level twice. And so right over here, and these little two areas where I was looking at to see the price hit and come out, and we pushed on up to 692.64, and the trade was closed. All right, and that is all that is on this descending channel. You are simply looking for a breakout to take place above the top line here And once you get that breakout and you get your confirmation to make a move, you enter, you have your target set clear so that once your target is hit, you come out. And imagine if I had stayed in and I overstayed my welcome, and once we got up here, it came back here again, it rejected again, and we came all the way back down, going further below where I even made my move. That right there is the importance of never overstaying your welcome. Okay, so I hope this lesson helped. I hope it's something you can add to your arsenal. Go to the charts. Go to whatever platform you're using. If paper trading is available, test this out. The next time you see something like this or this setup on your charts, do a little bit of back testing and see how well it works for you. A lot of times when I'm using something like this, I'm using it on a shorter term time frame. But if you're using it on a higher time frame, then of course it may be something a little bit longer term. But this is SPY. This is the 5-minute time frame, and I had no intentions of being in this thing very long at all right, this right here was all of 20 minutes, and that was $386 profit on this thing, was 3 contracts on this trade, and that was that. All right, so I hope this helped. I hope it's something that you guys can use, and with that, I'll see you guys on the chart.